Hey there, welcome back to the James Show. News Talk 820 WBAP, now on FM at 93.3. Yeah, I know the price of everything's going up. Yeah, I know the housing's expensive. I know your medical care is expensive. I know inflation's bad. I know that when I went and got Jimmy John's yesterday for lunch, it was $14.97. I just got like a number 11 with a large drink and some chips. Well, for me, that's bad. If you're on a fixed income, this could be a serious diminution of your lifestyle. Here to make some sense of this, Kathy DeWitt, from the host of DeWitt and Dunn, which you hear on a regular basis, don't you, on our radio station. Kathy DeWitt, how bad is inflation for retirees? Because I feel like it's been about 20% since, pre-coronavirus. And a 20% cut in lifestyle, that's got to be tough.
Oh, it is really tough. Thanks for having me. One of the challenges is that people that are in retirement, as you just mentioned, we take a look at inflation, housing costs, medical expenses, and pensions that sometimes have gone sideways. A lot of people have had to go back to work because they just weren't anticipating this. So that 20% number, people are really feeling it.
Well, I also feel bad for the people that retired 10, 20 years ago, and they had budgeted for when they go to lunch, maybe it would cost $10 by now, but it cost $15. So how do you not run out of money if costs are going up faster than you predicted?
Well, I think one of the biggest challenges is you have to make sure that your investment portfolio is actually producing something, right? Because we always have to hedge against inflation. But maybe we need to start eating at home and not at Jimmy John's. That's where we need to start right there. But, the challenge, too, is the fact that so many people have gone back to work after the COVID-19 virus that really hit, that really impacted a lot of people. And this year, we're going to have a record of 4.1 million Americans will reach 65 years of age this year, and many of them are going to all be still working. And that really is that's up since the 1980s, because around 1 out of 10 people were working. So things really have shifted, and you got to prepare for retirement. It's not like you're going to be able to show up and have it financed later down the road. Well,
if people are having to work longer than they expected, let's shift their expectations, Kathy. At what age should people expect to retire comfortably?
Well, I think one of the challenges is that you have to save like you mean it. And right now, a lot of people that are coming into our practice, they're trying to retire a little bit earlier, but they don't realize that they have a 50% chance that their life expectancy that they're going to live to age 90. So you have to factor in age into it as well. But I think if we take a look at full retirement age, that's a good place to start, around 67 years old, because you really get hit and dinged if you take Social Security prior to that. So you're eligible at age 62, but if you make over $22,000 in earned income on an annual basis, you're going to have huge penalties and have to pay taxes on that money. So you have to have a plan in place. There's no perfect number, but you have to take a look at how much money am I going to need in retirement? What do I want to do? And you don't want to live in poverty, and you don't want to have your expectations of this dream retirement that you've worked for your entire life kind of diminish because you didn't prepare for it.
Well, for people who don't have like real jobs like me, I don't actually do anything. I feel like I could do this until I was 85, 90.
Well, you know what? You probably could, but, do you really want to? That's the question. If you want to, that's a great thing, but having to is different. So I think if we take a look at saving and we put money away and we pay ourselves first, the generation that I'm really worried about right now is the millennials and Gen Z, because right now we have a retirement crisis, and the young people are not really taking any action to save for their retirement future. This is really a crisis that we see that's going to be, growing exponentially here as these youngsters get older.
All right, Kathy DeWitt, tell the folks listening how they find you outside of the James Show.
Sure. You can go to my website at DeWittandDunn.com if you need help with your finances, or if you need a retirement plan, or you could always catch us every single Saturday and Sunday on WBAP, and we're here to help all the listeners. But I just definitely want to tell everybody, you have to save like you mean it. You need to pay yourself first, and you need to invest wisely.
Stay away from boats is my financial advice.
Hey, and how about Jimmy John's? Hey, have a great day. Thank you so much.
Thank you, Kathy. And look, I deserve all that Jimmy John's criticism. I could just as easily make my own ham sandwich in my own kitchen for a fraction of the price, but I'm lazy, and their bread's really good. I don't know where they get that bread. 800-288-9227 if you want to jump in on the conversation. 800-288-9227. Coming up next, I'm going to round up some audio bites from the election 2024 and get you all caught up on that in 5 minutes. I'm James Parker. It's News Talk 820 WBAP, now on FM at 93.3. Hey there, welcome back to the James Show. News Talk 820 WBAP, now on FM at 93.3. We're going to talk about something nerdy, but I think you're up for it. This isn't hot and heavy. This isn't like something sexy or something titillating or something outraging like immigration, illegal immigration, or racism or sexism or women's Olympic boxing. But this happened in our backyard. I don't know if you saw this. I'm trying to digest this because I don't know. There's not a whole lot of people talking about this. This is a little bit of a heady topic, but Meta, the parent company of Facebook, has agreed to a settlement with the state of Texas. $1.4 billion. Yeah, I mean, that sounds huge. It's the biggest single state settlement secured in legal history. There's a federal settlement that Meta did that was a little bit bigger than this one. I mean, how much was that one?
$1,400,600 billion.
Well, no, it was a $5 billion settlement with the company in 2019. But that started kicking off some settlements or some lawsuits that came from the state level. There was one Illinois did a while back that got almost this much money, quite a bit. But yeah, that was $650 million with Meta. But in 2019, I don't know if you remember this part. You remember when you were get on Facebook? And you didn't take the picture and your wife didn't take the picture, but all of a sudden there was a picture of you. Someone else had taken it. Facebook recognized your face and added it to your feed. Hey, is this you? Well, at first they just started throwing it up there. Hey, here's some pictures of you. And they would show up on your feed. And then some people complained. They're like, dude, I didn't share that out. I don't want people to see me in a bikini at the beach. What are you doing? I got coworkers. I got clients. Come on, man. So then Facebook started asking for your permission. Hey, someone else posted this pictures of you. Facial recognition picked you up. Is this you? Would you like to post it? Well, that still wasn't good because the problem you have now is Facebook was keeping a record of everyone's face. I mean, it is in the name of the company, but that was making some privacy concerns and really some privacy concerned lawyers really excited. Because not only that, this was about the time that your phone could read your thumbprint and Meta could read the thumbprint reader on your phone. And so Facebook was storing your face and your thumbprint. Wasn't supposed to be doing that. Wasn't in the terms of service or something. I don't know what the lawyers were picking at. But there's been a series of lawsuits around different issues like that. Now, this one, look, $1.4 billion is a lot of money to me. It's a lot of money to Eric Bushman. He doesn't have that much money either. But for Meta, the parent company of Facebook, also WhatsApp and Instagram and some other interests, their profits for the first 3 months of this year, $12.3 billion. So they can pay this, no problem. Well, James, you're a civil libertarian. You're not worried about them running over your privacy rights? I mean, I am, but if it's illegal and someone was victimized, then someone needs to go to jail. I don't really agree with, generally speaking, punishments being fines, because that means it's legal for a price. It's not necessarily, it's illegal for you and me, because you and I, we can't do that. Little startups can't do that. Facebook's competition can do that, but Facebook can do it because they can afford it. So whether it's one of these like parking tickets or a speeding ticket or anything that's governed by a fine, that means it's just illegal for poor people, legal for a price. Are you going to get any of that $1.4 billion from Meta? What's their incentive to not do this in the future? What's going to happen to that money? Are we going to get it back with tax relief? I mean, we may. I'm just rhetorically asking these questions because we don't know. All right, my next guest, Ron Snofer, he's a property insurance expert, is going to deal with something I hear complained about from people like you all the time. Why has my home insurance premiums gone up so much? Well, it's gone up 21% in the last year. Ron, why?
Thanks for having me on. It's housing prices have gone up through the roof. You know, the cost of construction, cost of materials, cost of labor, inflation is killing us all around, and insurance is just a byproduct of that inflation.
Well, my wife has family in New Orleans. I hear something about some of my friends from Florida. They complain because natural disasters have caused theirs to go up by 100, sometimes 200%. So when I look at my Texas neighbors, y'all are grabbing about a 20% raise in your home insurance premiums. You should be counting your blessings because the rest of the country, a lot of them are doing worse.
Very true. The national average is only doubled from about $1,700 to just short of $4,000 for an annual insurance premiums right now, but that's still a lot in the last couple of years.
Look, 20% though seems to track with about how much my grocery bill has gone up and how much the cost of some of these other things. So is there really anything more than inflation at play here?
So in other areas like Florida, they've had a lot of disasters. They had Hurricane Ian, which wiped out a lot of Florida 2 years ago. And because of that, they're trying to rebuild. With rebuilding is supply and demand. They have more demand for wood, lumber, concrete, labor, so on and so forth. Everybody goes there, brings their materials, and pulls it from other markets. Well, now you have a shortage in other markets. Now it costs more money to build a house in Texas. Now it costs more money to build a house in other states because they're trying to rebuild Florida right now.
All right, Ron Snow, for the guy listening to us, isn't happy with his home insurance premiums going up 21%. What does he do?
You can look at options like shopping your rate, going to different carriers to find out who has the best premiums, who also has the best coverage, because it's not just a matter of finding out who has the best rates. They may be a reduction in what your actual insurance is. There could be exclusions. You could have a higher deductible, so on and so forth. You don't want to. You got to shop apples to apples, not apples to oranges.
Yeah, I remember when I bought my house, I had to answer some questions that made me think, like if your house doesn't have a home alarm, if you do get a home alarm, maybe you'll get a little bit of a break on your insurance or a couple other features. I just remember that being in the paperwork I filled out for the insurance. Is that worth pursuing?
Deadbolts, home security systems, removing the swing set or the trampoline in the backyard is also a discount. It's a liability to have those things in the backyard. And if your kids are grown and they're not using those things, get them out of the backyard.
That's solid advice. Ron Snofer, how can they find you outside of the James Show?
www.nationalclaimsnegotiators.com.
Thank you very much for your time. I appreciate that. And if your home insurance premiums have gone up 21% in the last year, dude, we feel so sorry for you. We're all going through this. I'm getting kicked in the teeth, too. You're not alone. Thank you very much for hanging out on the James Show today. Stay put, though. Coming up next is Mark Levin. I'll be back to do this from 2 to 5. But in the meantime, if you want some more James Show action, check out the podcast. It lives on at WBAP.com, the WBAP app, or really wherever you're already listening to podcasts. Find me on social media. Follow, like, subscribe, share, retweet, whatever. And y'all go be nice to each other. I'm going to do this again tomorrow. Come join me. I'm James Parker. It's been the James Show. News Talk 820 WBAP, now on FM at 93.3.